the end of cold calling? Well, rumor has it that it is, and we'll separate the facts from the fiction. And either way, I'm gonna let you in on an effective alternative that I'm betting you're gonna like a whole lot more anyway. But cold calling first. Let's go. Hi, my name is Matt Theriault, CEO of Epic Real Estate, where we show people how to invest in real estate so they can escape the daily grind and retire early. And to make an early retirement through real estate a reality, you're gonna need to find good deals frequently and consistently. And that can be pretty tough to do through the traditional means of working with real estate agents. And that's why we show you how to go to the same source real estate agents do to find the deals before they do. And we've got a huge bag of marketing tricks for this. And one of the oldest tricks, although this one isn't really a trick, is picking up the phone and just calling sellers, asking them if they want to sell their property. In other words, cold calling. You know, it was author Stephen King that said, sooner or later, everything old is new again. And in the last few years, as you may have noticed as a consumer, cold calling is new again. This is where you make an unsolicited call by phone in an attempt to sell goods or services. And it's the word services that us real estate investors use as our get out of jail free card, as we're not selling anything, right? But rather offering to buy something. I like that argument, but I'll tell you in a minute why even if you win that argument, it can still cost you. You know, cold calling isn't for every investor. In fact, most people can't stand doing it, but they do it because it's essentially free to do, and when done right and consistently, it works. But cold calling took a big hit in 2003 when the Federal Trade Commission established the Do Not Call Registry in order to facilitate compliance with the Telephone Consumer Protection Act of 1991. You see, the Do Not Call Registry was all the rage when they put this up, as everyone rushed to register their phone numbers to stop the annoying solicitations they were all receiving. And it worked. For a long time even. But somewhere along the line, it lost its oomph, it lost its buzz, and marketers, they started cold calling again, profusely, and commonly hiding now behind virtual assistants, robo-dialers, and pre-recorded messages. People are cold calling again, and have been for the last few years. But rumor has it that this is all about to change as the FCC this year has updated multiple times the TCPA to combat the rising number of around-the-clock unsolicited phone calls that we're all receiving. For example, last December, the Department of Justice announced a settlement with Dish Network of $126 million in civil penalties for placing millions of telemarketing calls. In March, the FCC issued a record $225 million fine against a Texas company for making robocalls numbering in the billions.
Okay, Matt, good scary examples, but what about real estate companies?
Recently, Remax, Keller Williams, and Coldwell Banker have all found themselves in court defending their agents' unsolicited phone calls to homeowners.
Yeah, Matt, but those are real estate brokers. What about real estate investors?
The FCC this year has fined real estate home buying companies approximately $6.3 million. But that is small potatoes compared to the previous examples. What should be a bigger and immediate concern for real estate investors are the growing number of entrepreneurial-minded citizens fighting back with their new business model of filing TCPA lawsuits against telemarketers. A few real estate investors in my mastermind, they shared with me some of their recent run-ins with these individuals. And generally, it works like this. When you think you've got a motivated seller on the line, as they're answering your questions and you're answering theirs, like what's your name, your company, and phone number, and once the seller has those answers from you, they interrupt the conversation by notifying you that your call is in violation of the Telephone Consumer Protection Act. Now, here's the deal. Whether you are or aren't in violation, it's irrelevant, as the law states that you bear the burden of proof to prove that you are compliant. And that formal proof happens in court before a judge with a minimum fine of $500 up to $1,500 per incident, not to mention the expense and inconvenience of appearing in court. And that can be pricey, particularly if you are investing virtually from another state. But the motivated seller decides to do you a favor and offer a quick and easy settlement of, say, $1,000. You get the picture. Pay me $1,000 and I'll spare you the inconvenience of meeting me in court. Now, my peers, up to this point, consider this nothing more than a cost of doing business. Their cold calling efforts are lucrative enough to justify the risk of this uncommon, but becoming less uncommon experience. So if you're of like mind and you would consider just the cost of doing business as well, let me give you 9 guidelines to follow that can mitigate your risks. Number 1, register for a subscription account number, an SAN. According to the DNC website and the FCC, every seller should subscribe, pay the appropriate fee, and agree to the certification requirements to receive a subscription account number with the National Do Not Call Registry. I put a link in the description below on how to do that. Once registered, you will need to subscribe to every area code that you're going to be calling. And your first 5 area codes are free. After that, you'll be charged on a per area code basis. You must also register your campaigns with information about use case and examples of the calls and messages that you're going to be sending. Number 2, scrub your list against the National Do Not Call Registry, the DNC. Again, a link in the description on how to do that. Number 3, maintain an internal Do Not Call list for your company. This is a list of anybody who has opted out of receiving phone calls or text messages from your business, and you must honor it for the next 5 years. Number 4, observe federal and state call times. You want to avoid making calls before 8 a.m. or after 9 p.m. in the consumer's local time zone. That's a general rule because these rules, they vary from state to state. In the description, you'll also find a link to each state's specific rules. All right, number 5, disclose, disclose, disclose. When making your calls to sellers, whether it's you or one of your reps, see to it that the following is disclosed: your name, company name, and phone number or mailing address. Number 6, make sure you have consent, meaning if you are using automatic dialing systems or artificial or pre-recorded voice messages of any kind, you must first obtain prior written consent from the seller. I've provided another link below for you with specific types of consent that you must obtain. So number 7 of these 9 guidelines, pick up within 2 seconds. Yep, you gotta act fast if you are using an automatic dialing system or pre-recorded message as a greeting. A live sales rep must pick up the phone within 2 seconds of a seller's answer. Now, I'm not sure how this is monitored, but that's the rule. Number 8, know when to hang up. You see, the law says you must disconnect the call if you fail to get someone to pick up the phone within 15 seconds or 4 rings, whichever comes first. And this is another tough one I'd think it would be to enforce, but that's what it says. And number 9, keep call abandonment rates low. Your abandonment rate for calls answered by a live person cannot exceed 3% in a 30-day period for a single calling campaign. Again, I'd imagine it'd take an internal audit of some sort by the authorities to flush this one out, but now you know. By following these 9 guidelines, you should skirt most of the new speed bumps the FCC has put out there. Now, the alternative, of which I prefer, that involves essentially zero risk, is to direct your marketing efforts to having sellers call you. Personally, I hate cold calling, mostly because I burned myself out early in my career. I mean, there was a day where I hung up my robo-dialer for good, and it was the day when a mentor of mine asked me a simple question. He said, "Matt, how would you do business if your phone only worked for incoming calls?" It was then when I realized my primary job is not necessarily that of a real estate investor, but first a marketer. So I dove in headfirst into marketing, and I haven't made a cold call since. And then I elevated my game even more when I started hiring marketers better than me to do the marketing for me. And I'll let you in on my secret weapon in a minute. But one of the marketing secrets I've learned is to listen to what other real estate investors and marketers are saying. You know, when I start hearing a number of people say, such and such doesn't work anymore, that's when I know that such and such is going to be the thing that starts working again very soon. Once people start fleeing something that formerly worked, is the time to run towards it. This past year, that was direct mail. It doesn't work anymore, they said. And everywhere I turned, I heard people were opting for cold calling, texting, and pre-recorded voicemails. And I know this to be true because I'm an absentee owner of 50 or so properties. And I used to get postcards and letters from investors seemingly daily. And it was almost overnight that I stopped receiving mail. And I started to get a lot of text messages and ringless voicemails. So I ramped up my direct mail and I worked with an expert to execute it for me. And I recently teamed up with my expert, my secret weapon, so she could help my students as well. Because there are 2 questions that I get almost every time I'm on one of our Epic support calls. And they are, number 1, what's the best mailing list for motivated sellers? And 2, should I send postcards or letters? And my answer, it's always the same. It depends. It depends on your market, your experience, your availability, and your budget. And what that means is that there is not a one-size-fits-all answer, but there is an answer for you. That's why Emmy Garrettson of REI Print Mail joined Epic as a direct mail coach to work with my students one-on-one to customize the perfect direct mail marketing plan just for them and their market. But you don't have to be one of my students to get a custom plan from her. If you take your real estate investing seriously, she'll gladly work with you. Her coaching, it's free of charge for you too. That was the deal that she and I made. And she has amazing stats on the most profitable mailing lists and best mailing pieces for each specific market in the US. And she's an open book with her data. So if that feels right, you can pick a time to hop on a call with her and brainstorm some ideas about you and your market. And you can do that at callemmy.net. Again, there's no charge for her coaching. And what you'll find is that any one of the things Emmy shares with you can move the needle immediately for your business. And my experience is that one of these is going to resonate with you and stand out as the big opportunity for you specifically. So she'll be able to spend more time with you on that. So if you'd like to take a free look at what the perfect mail campaign looks like for you and your market, she's ready to get started right away. Call Emmy and then she'll take it from there. What did you find most valuable? Let me know below. And who else do you know that needs to see this? When their name comes to mind, please share with them. Oh, and if you are already subscribed, I pulled this video out special for you to watch next. Otherwise, I'll see you next time. Thanks for watching.